Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. I'm so excited to welcome you to yet another promising edition of the Extreme Speed Live as we are going to be taking another technical dissection of the current market structure to unravel the potential trajectory of price action for today. But before we begin, let's run through our daily routine to confirm that we are all on the same page. So if you can see my screen and you can hear my voice loud and clear, please let me know in the comment section by typing in hi. So once you type in hi, I get a feedback that we are all on the same page, and then we shall be good to kickstart the session. So I look forward to your feedbacks in the comment section. Thank you very much as you do so. So while I load up my comment box, kindly reciprocate your kindness by confirming that you can feel me here. Thank you very much. Sorry, I'm trying to load up my comment box to see your feedback so that we can kickstart the session. So it's taking some time for me to load up. So please give me a moment and we shall be good to go in a couple of seconds. Okay, so I can see a couple of comments here. Thank you very much, guys. Andre1302, thank you very much. Mr. Shrans, good morning to you. Atbo, good morning. Week one, okay. 404089, good morning to you. Hey, Carrie, your message are just dropping in. Thank you very much. Panoyo621, glad to have you around this morning. Good morning to you. Thank you very, very much. 172352222, good morning. Thank you. Ahmad, good morning to you. Thank you very much, guys, and I really do appreciate that. So I will take this as a positive feedback that we are good to go this morning, and it's on this note I welcome you all once again to yet another promising edition of the Extreme Speed Live. My own name is Sharif Daramola, and for the next 1 hour, I'm going to be your host as I will be taking you on a trading journey where we shall be trying to unravel the potential direction of price action on all of the assets we've been monitoring since the beginning of this week. Well, so far this week, we have been monitoring four major financial assets, which includes the US All Spot, the USTech100, the GBPUSD, and of course the XAUUSD, popularly known as the gold spot. And in fact, since the beginning of the week, we've done fairly well across this asset. The XAUUSD will be considered the most profitable asset at this point in time, as we scooped in some significant amount of profits on that one. On the GBPUSD, we also had some interesting sell positions on that one as well. And only for the US All Sport, which didn't do very well at the beginning of the week, but we're beginning to see some traction to the south, which we of course took advantage of. So we are going to be looking at all of these in details and see how we will be managing our existing positions while we also prepare ourselves for today's trading session. For those of you who are joining us for the first time, you're highly welcome on board, and I'm very excited and glad to have you around with us this morning. I'm very sure you will be wondering what this is all about. As technical traders, we usually gather here every day to come together as a community and engage in follow-ups and reviews of our current positions in preparation of the New York session. So the Extra Speed live session usually kickstarts 10 a.m. UTC, 11 a.m. West African time, and I recommend that you stay tuned in so you don't miss out on these valuable ideas we will be deliberating on today. My aim is to equip you with the knowledge and skills necessary to make informed trading decisions independently. Now, the more time you spend with us here, the better you will become at comprehending our analytical approach and utilizing the information gathered here to enhance your own trading decisions and strategies. So once again, I extend a warm welcome to you and encourage you to actively engage in the comment section. So with that being said, here we will be diving right into the business, and as usual, the first thing we normally do is to keep tabs with the fundamental factors that is likely going to be affecting the market sentiment for today. Well, so far this week, based on the asset we have been monitoring, we have focused on both the United States and the United Kingdom. However, there are no impactful event from the United Kingdom, so our focus is mainly on the United States. Now, if we look at today, Wednesday, December 6th, we are looking at the ADP employment change, another significant economic indicator that everyone will be looking forward to today. Now, for those who don't know what the ADP employment change is, this is a monthly economic report that provides an estimate of the change in non-farm private employment in the United States. Now, a positive ADP figures indicate job growth, which often boost market sentiment as they suggest a healthier labor market, while negative figures may lead to concerns about economic slowdown and weigh in on the market sentiment. Now, if we look at the previous data for the previous month, that is for the month of October, it came in at 113,000, as you will see here, and we have economists projecting 130,000 for the month of November, which is considerably higher than the previous month. So this is suggesting that economists are thinking that there's going to be some expansion in that sector. So we look forward to see what the actual data will be. Will it be just as expected, below expectations, or even beyond expectations? And don't forget that yesterday we looked forward to the ISM Services PMI as well, which came in beyond expectation at a 52.7 actual figure for the month of November, which was also a sign that the U.S. economy is resilient, at least in the recent time. So this has also given some positive traction in favor of the US dollar in the last 24 to 36 hours. So we are going to be looking at how we are going to be anticipating today's event. And of course, we do know that this event usually, the anticipation of this event usually affects the market sentiment. And of course, we shall be seeing the reflection on the chart as price action. So with that being said, here we will be diving right into the details for today. And hold on a second. All right, so the first asset we are going to be looking at this morning is going to be the US oil spot. And on the US oil spot, we have an interesting sell position which is currently running at this point in time. Remember that the week did not really start very well for us all in this community, as we had a couple of stop losses hit at the beginning of the week. However, before we go into the details, I would like to share with you some of the fundamental factors that are going on behind the scenes, driving the psychology of the price movement so far this week. Well, there has been some concerns about the effectiveness of the OPEC Plus supply cuts, and apprehension about a deteriorating demand outlook in China is also putting some pressure on the oil prices. Now, this morning we had an headline this morning as Moody's downgraded China's sovereign credit rating from stable to negative, citing increasing risk to growth and a potential crisis in the property sector. Now, this development serves as a warning to lenders about the heightened risk of default in recent years. Now, this economic uncertainty in China, as the world's largest oil consumer, may constrain some upside potential for US oil. Now, attention now shifts to both the US ADP employment change for the month of November and, of course, the EIA crude oil stocks change for guidance into how the key players will be managing this position. And these are very, very impactful events that everyone in the market will be looking forward to. And given these factors, it is important that for those of us who have a sell positions running right now, let's ensure that we protect all sell positions and, of course, keep an eye on opportunities of a potential reversal. Now, for the sake of those who missed out on our earlier editions, let's quickly run through how the week started for us all in this community and what led to the decisions that we are making in recent times. Now, at the beginning of the week, it was more of a consolidation phase. Initially, price was ranging between the $74.75 level and the $73.50 area, as you will see here. However, going into yesterday's trading session, we went ahead to increase the range. As you saw, the expansion dropped into the $73 area, as we saw here. Now, this further increased the level of uncertainty in this market. As you know, I mentioned earlier the fundamental factors that is going on. So majority of the key players had stepped aside, waiting for major cues into how to position themselves for bets against or for the US oil. However, yesterday we talked about the new structure we identified, where we said the descending trend line that we spotted on the higher time frame will be our major guide for yesterday's trading session. Remember, we had this trend line mapped out, and you know how we use our descending trend lines in this community. As long as price action remains below the descending trend line, we feel comfortable in our sell position, and of course look out for more selling opportunities. And as a result of this observation, we were looking at selling below these two levels. In fact, three levels we have here. We have the $73.50 level. We had also the $73 area, and finally we also added one more, had the breakdown of the $72.35 level, which happens to be the lowest point as at the time we were analyzing this market yesterday. And as you will see, price just broke down that lowest point. So currently, let's see how many pips in total we have accrued in the last 24 hours. So if you are taking the first position from here, we have about 160 pips in profit. Then the second position here is running with about 110 pips. That's about 270 pips, while the third position is currently running with about 50 pips. So we have close to about 300 pips in profit for the second to the third day of the week. So we are able to recoup the loss we incurred at the beginning of the week. And for those of you who are part of this trading opportunity, well done, and kudos to you for being on standby to capitalize on this move. Now, with the situation we have right now, it is very, very important that we move all stop losses to protect the current sell positions we have, as anything could happen as everyone gears up for the US ADP employment change and, of course, the EIA crude oil stockpile report. Now, in that regard, we want to be moving our stop losses into anywhere above the $72.60 level and that area below the $73 area. Now you want to ensure that you give enough breathing space for price action to move around while you move your stop losses too. So let's secure all positions, move all stop losses, and let's see how far this bearish momentum is going to go. So with a well-secured position at this juncture, what is our plans? Are we going to continue selling, or are there chances that buyers can come in? And in fact, for those of us who had missed out on this opportunity, are there chances that we could get new opportunities for a potential trading signal? Now, for us to have a better understanding into what is going on here, let's run through the higher time frame and refresh our memories as to what we saw at the beginning of the week. Now, here on the 4 hours time frame, what we did at the beginning of the week was to take into consideration the nature of price action since the mid-month of October. And what we saw here was quite an obvious bearish momentum. As you saw here, price had consistently formed lower lows and lower highs in that regard. So we did connected the series of lower highs to give us a descending trend line. In fact, we had a couple of them, but the major one we were using is this one I'm highlighting on your screen with the red highlight you see here. So this trend line here had continued to maintain the bearish momentum, and in fact, in addition to that descending trend line, we had the key level situated at the $75 level to emphasize the importance of how that level had played a major role in determining the direction of price action since the beginning of the month of November. Now we saw how the trend line and the key level was broken to the downside during Friday's trading session, and in fact we saw a couple of retests of this trend line during the course of the week to further emphasize the strength of the sellers in this particular market. And as a result of this, price had continued to drop to the downside, and in fact at this point in time we have seen the very strength of the sellers, as you will see that the $72.35 level that was marked out as the lowest point at the beginning of the week has been broken to the downside, as you will see here, to further incite the idea that sellers are getting stronger. Hence, we want to be looking out for selling opportunities. Now, with the breakdown of the support line at the $72.35 area, our center of focus will now be zoomed into this particular area to look out for new trading opportunities. Now, for those of us who probably had missed out on the breakdown of the structure, well, I will be advising you to exercise patience and let's see if the market will probably come back to do a retest of structure, which will fall in line with some technical expectations to incite a downtrend continuation. So what we will be doing at this juncture, for those who missed out, ensure that we remain patient and wait for a retest of structure to join the decline. And if price will probably continue to the downside after the appearance of some trend continuation pattern here. Now, with the information we have gathered on the 4 hours time frame, let's scale down into the 1 hour time frame and let's see how we intend to capitalize on the next potential move. Now, scaling down into the 1 hour time frame, we will begin to see things more clearly. Now, we have a structure that we will be using to guide our decisions for today. So I want to replicate this trend line here, and let me bring out my line chart. Excuse me, please. So I think we have a trend line around this area. So I would want to thicken this a little bit to emphasize its importance. So let's give it a 2 pixel and let's bring back our candle chart and see. So you will see here how this trend line has been respected since the beginning of this week. It was more of buying niche at some point, as you will see, buy pressure engulfing candles from that area, buy pressure. The same thing also happened yesterday, not until the later part of the New York session yesterday when price action did break down that trend line. And since the breakdown happened, we saw a retest of structure, retest again today, continued selling pressure to further emphasize the strength of the sellers. Now, going into today's trading session, this trend line here is going to be playing a major role in guiding our trading decisions. Now, for those who had missed out on this opportunity, let's see if the market will come back, maybe to retest the structure where the inability of buyers to break out of the trend line and the $72.35 level will give us a beautiful opportunity to join or add more sell positions to our existing trade. Now, remember, I mentioned earlier that for those of us who have a sell position, you should kindly move your stop losses to that area above the $72.60 area while we give enough breathing space for price action to move around. So this is how we are going to be managing a sell position on the US All Spot today. Now, in as much as we're looking out for selling opportunities based on the current market conditions, we cannot ignore the potentials that buyers could come in. Now, if buyers are going to be coming in, what are the things we want to see on this chart that will convince us that we want to be shifting our buyers from bearish to bullish? Well, like I said earlier, I told us how this trend line here, this newly identified trend line, is going to be playing a major role in guiding our trading decisions for today. Now, if it so happens that price action breaks out of that descending trend line, which of course would also be breaking out of that $72.35 level that we saw on the higher time frame, then at this point we want to start considering buying. Now, there are two ways to which we can capitalize on this buying opportunity depending on where you are with us in this community. Now, for those who are profitable so far this week, well, you can afford to place a buy stop order above the $72.35 level to capitalize on that uptrend situation if price action ever breaks out of that descending trend line. However, if you are new and you don't have any leverage to bank on, then you want to exercise patience and wait for a retest of structure. It could be the retest of the trend line or the $72.35 level, but most importantly, what we want to see is continued buy pressure around this area, emphasizing that sellers are losing the momentum. Then it will be a good opportunity to join the uptrend move. And if bullish opportunity comes in, we have very important levels as well that we can use to maximize the potential of the bullish move. We have the $73 level, we have the $73.50 area where we can add more positions to our existing trade. Now, if this buy opportunity ever comes in and the price breaks out of the trend line, please note that if price continues to climb up, this is a counter trend opportunity and you want to be on standby to ensure you secure your positions as price action moves in our favor. So we have levels that we look out for. Once price gets into those levels, move your stop losses accordingly, lock in some profit. And if price gets into this descending trend line we identified on the higher time frame, kindly move your stop losses again and secure your positions. So let's see how the market will play out with this current structure we just identified here. And if you are patient enough to wait for structures to mature, trust me, you will be here tomorrow with some positive experience. So these are my views on the US All Spot for today. If you have any questions, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions, after which I want you to use that time to also to mark out the levels on your charts. All right, everyone. I can see a handful of comments right here. Thank you, guys. Okay, Hali985, good morning to you. Emma Newton, good morning to you. Sapo Sons, good morning. Hey, Steamroller, good morning to you this morning. How are you doing? I'm very happy to have you around with us this morning too, as well. 7522152. Thank you. Good morning. Moma, good morning. Anela, good morning. Anilen. Okay, I'm very glad you find you here this morning, and you're very much welcome as well. And thank you, Steamroller, for this notice. Well, it has come to my attention that there are individuals in the comment section falsely claiming to probably be affiliates of Extreme Speed or whatsoever, or trying to refer you to some other platforms that are not considered at this point to be legitimate. So I want to emphasize that these comments are scams and spams. We have people here like General's Bull, who else again, cryptic analyst. All these are spams and fake identities on this platform. Please stay clear of these individuals. These are scammers and not affiliated whatsoever with Extreme Speed in any way. They may try to lure you into fraudulent schemes, phishing attempts, or request personal information from you. So our representatives here will have the official badge of Extreme Speed, and in fact, if you are in doubt, you can easily contact the Extreme Speed contact center. You can find that in the front of your home page. You have the head and the headset logo. Click on it and it will direct you into the Extreme Speed customer service center. Okay, your safety and security are our top priority. Extreme Speed is committed to providing a safe and trustworthy environment for our community. So please stay clear of any references to other platforms from this comment section, and thank you very much as you do so. All right. Okay. Thank you, Steamroller, for informing me that. I hope you heard all what I said. Please stay clear of these people in the comment section. General's Bull, cryptic analysts. They are all spams and scammers that want to probably take advantage of your innocence. Okay. All right. So, Liberdade, good morning to you. Glad to have you around with us this morning. Moma, good morning to you too. All right. So, in the absence of no further questions, I will take this as a confirmation that we are all on the same page. And in that regard, let's move on to the next asset on our watch list. Sorry. So the next asset on our watch list for today is the USTech100, and in fact, we've had some interesting positions this week, interesting and profitable positions. Remember, we were selling at the beginning of the week, where we scooped in some significant amount of profit, and from yesterday's trading session as well, we also had the privilege of taking advantage of some buying opportunities as well. In fact, on the USTech100, we are on the positive side of our portfolio if we had capitalized on these opportunities. So let's dive deep into the current market structure, and let's see the developments that led to the decisions we made at the beginning of this week. Now, at the beginning of the week, it was more of a consolidation, as we saw price confined initially within the 15,995 level. That was where price action was coming from at the beginning of the week, before we begin to notice some buy pressure around the 15,932, making it the support line of that range identified here. Now, you know how we use our range in this community. Whenever we spot them on our chart, we exercise patience and wait for either the breakout of the resistance line of the range to give us an opportunity to buy, or the breakdown of the support line of the range to give us an opportunity to sell. And if you look at the structure closely, you will see that no point in time did we see attempt by buyers to break out of the resistance line, as it was more of price action maintaining its potentials around that support line, leading to a couple of breakdown of that support line, nearby giving us some insight into the potential that price will drop to the downside. And for the fact that price action was around the descending trend line, we capitalized on our first sell position for the week, had a breakdown of the 15,932 as you will see here. Then we also added position at the breakdown of the 15,900, and of course added one more at the breakdown of the 15,835. So we had about 3 sell positions at the beginning of the week, scoping over 2 to close to 300 pips on that sell move before the bullish momentum came in. Now, during our live session yesterday, we begin to notice how sellers were struggling as soon as price got into the 15,470 level. And in fact, we were around here during our live session yesterday, where we said if the buy pressure persists, we might be getting ready to join a bullish move. And one of the parameters we identified here to capitalize on the bullish momentum was this descending trend line we spotted after connecting the series of lower highs since the beginning of this week. And one thing we said here is that we will need price action to break out of that descending trend line to give us a good signal that we are good to start buying the USTech100. Now, we had a buy stop order above the 15,835 level, looking out for buying opportunities from that area. And in fact, if you had missed out on that opportunity, the market was so kind enough that it came back, retest the structure, and since then had continued the uptrend move. And remember, during our live session yesterday, we talked about adding more positions if price breaks out of the 15,900 and the 15,932. So at this point in time, you should be having a minimum of 3 buy positions. And for those who took advantage of this opportunity, well done to you, and kudos to you for being on standby to capitalize on that move. So the first position should be running with about 100 pips in profit, while the second position will be running with about 32 pips in profit, and while the third position is just currently trading around that entry area. So it has been a wonderful week for us all on the US Tech 100 so far this week. Now, the next thing we want to be doing now is to ensure that we secure all the current buy positions we have right now by moving our stop losses accordingly. And in fact, I want to be suggesting that anywhere below the 15,900 and 15,800 area, 880 area seems most appropriate to lock in all positions, as we do want to be giving enough breathing space for price action to move around. So let's ensure that we secure all positions while we wait and see how the market is going to be playing out going forward. Now, with a well secured position, what is going to be our plans for today? Are we going to continue buying the US Tech 100, or are we going to be getting ready to join a bearish move? Now, we want to be scaling up into the higher time frame so we can refresh our memories as to what we saw from an holistic perspective. And for the sake of those who missed out on our earlier sessions, you have the privilege of being on the same page with us. Now, scaling up into the 4 hours time frame, this was where we started our analysis for this week's trading session. And in fact, it was quite obvious that price action has been on a bullish momentum since the last week of the month of October. Now, we had an ascending trend line here, which emphasized the bullish momentum. We had one right here, and we had the other one, which is not that significant at this point in time. So let's just, for the sake of this video, for the sake of this session, we shall be focusing on this one right here. So this ascending trend line has been supporting the bullish momentum for over 4 to 5 weeks now. and not until last week, Monday, was it? Okay, this month, that's like 2 days ago, we saw our price broke down of that ascending trend line with an engulfing bearish candle to give us an insight into a potential momentum shift. And usually, whenever we notice a breakdown of a major structure, such as this trend line here, we expect at some point in time price may come back to retest the trend line that was broken to incite a downtrend continuation. However, it is not all the time this kind of situation, this theoretical situation happens. So we want to ensure that we have significant confirmations before we jump into any conclusions. Now, there is something interesting about the structure ever since price action did break down the ascending trend line. Now we saw how price came back into that 15,470, a level which has a memory for buying power in the last 3 to 4 weeks in this market. As you will see, every attempt by the sellers to break through has always been met with stiff resistance from the buyers, as you will see here. Look at what happened here. Look at what happened around here by pressure. And in fact, yesterday, at the beginning of the week, despite that strong and massive engulfing candle, we saw that as soon as it came into the structure, we saw buy pressure resume from that area again. And in fact, yesterday as well, we saw this whole situation, which made us to start considering that buyers may come in from that area, as you will see that sellers were finding it difficult to break through that structure. And one of the things we decided to do here yesterday while trying to position ourselves for the New York session was the appearance of this reversal pattern in the form of a double bottom structure that we said here. And we used the 15,835 level as the neckline of that reversal pattern, which interestingly was finally broken yesterday and in fact retested to confirm and validate that reversal pattern. So that was what led to our buying decisions we made during our live session yesterday. And right now, price is gradually approaching that ascending trend line that was broken at the beginning of the week. Now, the question at this juncture is, will price action be retesting the ascending trend line to incite a downtrend continuation, or are we going to be having price action climb back above the ascending trend line to incite another wave of bullish momentum? So this is what we will be focusing on today. So we are either looking at some reversal patterns around this area, like continuous selling pressure, to tell us that okay, price wants to retest the ascending trend line that was broken on Monday to incite a bearish move. And in fact, if price breaks out of the ascending trend line, then we shall be back within the buyer's territory. So our center of focus for today is going to be between the 15,960 and the 15,920. And as a result of this, we will be scaling back down into the 1 hour time frame to have a better perspective into what is going on around that area. Now, scaling back down into the 1 hour time frame, things now get a little bit much more clearer, as you will see now that price action is back into that range we identified at the beginning of the week. Remember, we had this range marked out between the 15,995 and the 15,932 area, as you will see here. Price now is back into that range, and in fact we can see that we begin to notice that barrier that incited the bearish momentum at the beginning of the week, just right around the 15,960 level. So I want to mark out this level here. This was the level that's incited the selling opportunities we capitalized on at the beginning of the week. So let me label this area. So we have it at the 15,960 level. You do want to be doing the same, as well as we will be needing this level to capitalize on more buying opportunities today, or even selling opportunities, whichever case it may be. So look at what happened here at the beginning of the week. We saw our sellers negated all attempt by the buyers to break out of that structure, and this led to that first sell position we had at the beginning of the week. Now that price action is back into that structure, you will see that throughout the Asian session, buyers were struggling to break out of that level, giving us sign of the resilient nature of the sellers around that area. Now, will the selling pressure persist, or are we going to be seeing a situation where this level will be broken to the upside? Now, remember that we are also around that area, which is also close to the ascending trend line we identified on the higher time frame. So is it going to be a situation where selling pressure will persist to incite a downtrend, or we will see a breakout of the structure to incite an uptrend? So let's talk about the potentials of the sellers here, considering that this area is known to be a seller's territory, at least since the beginning of this week, that area between the 15,960 and the 15,930. Now, if I want to be selling at this juncture, I do want to see some significant confirmation to make me feel comfortable joining a bearish move. Now, for me to sell, what I want to see is a breakdown of the 15,932. Now, I will need some retest of structure to happen here, where continued selling pressure around that area will give us an opportunity to join a decline to the downside, as the continued selling pressure here will tell us that buyers are finding it difficult to break out of the 15,960 level. Now, if it just happens, sometimes price will just break down and continue to the downside without even retesting it. If that is going to be the case, if price can break down the 15,900, let's have a sell stop order below that structure, and stop losses may be anywhere right above the 15,940, which will be dovetailed into about 30 to 40 pips thereabout to capitalize on the bearish momentum. So we are looking at selling below the 15,932 and the 15,900 for the USTech 100. Excuse me. Now, if the contrary is what happens here, and instead price action goes on to break out of the 15,960, a retest of that structure will be giving us a confirmation to join an uptrend move. And if price action continues to climb up, a breakout of the highest level where price action has been for this week at the 15,995 level will be welcoming more buy positions. So our center of focus for today is basically between a tight range that is between the 15,960 and the 15,932 level, where depending on the direction of the breakout will give us an insight into where we are going to be going. So these are my simple views on the USTech 100 for today. So let's mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. If you have any questions whatsoever as regards to the current setup, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions before we move on to the next asset on our watch list. All right. I see your comment, Junonomix. I hope I pronounced that correctly. Good morning to you. Glad to have you around with us this morning. So, in the absence of no questions, I want to assume that we are all on the same page, and all I've said is quite clear enough for us to execute when price gets into those levels. So, with that being said here, let's move on to the next asset on our watch list. So the next asset on our watch list for today is the GBPUSD, and of course we have been selling this asset since the beginning of the week after price action broke down that 1.26680 level, which happened to be our support line of that range identified at the beginning of the week. Well, the US ISM Services PMI for November surpassed market expectations, indicating a stronger growth trend in the US economy. Now, the focus now turns to this week's US employment data, particularly the ADP employment change, which is coming up later today, and the non-farm payroll, which is coming up later in the week, as they may provide insight into the future interest rate trajectory of the Federal Reserve. Now, despite the significant buying activity during the Asian session, the later part of the Asian session the later part of the New York session the Asian session, the sell position from yesterday still remains very much intact, as you will see here. Now, the slight decline in the US dollar could potentially benefit this pair even amidst a cautious market sentiment. Now, today's attention will be focused on the ADP employment change for guidance, and of course, the anticipation of this event will definitely reflect on this chart as price action. So now let's look at the nature of the price action since the beginning of the week as we prepare for today's trading session. Now, at the beginning of the week, we saw how the market started with a volatile move in price action, and we had a wide range where price was confined within the 1.27250 and the 1.26680 level, as you will see here. Now, whenever price action falls into a range like this, we usually exercise patience and wait for either the breakout of the range to give us an opportunity to buy, or the breakdown of the range to give us an opportunity to sell. However, during the first 10-12 hours of the week, we saw our price remain below and around the support line. And in fact, we had multiple breakdown of the support line, inciting the idea that sellers are gradually gaining momentum behind the scenes. And as a result of this observation on Monday, we decided that we will be selling below the 1.26680 level, which triggered our first sell position, and we continue to add more positions at the breakdown of the 1.26180. And during our live session yesterday, we added this one at the 1.26050 level to maximize the bearish momentum in this market. So at this point, we have about a minimum of 3 positions running right now. And for those who still maintain their bearish position, it is high time we wanted to move our stop losses and secure this current position at this point. Now, if you would ask me where do I think is most appropriate to place our stop losses on the GBPUSD, well, I would just say around the 1.261800, while we also ensure that we give enough breathing space for price action to move around. Now, with a well-secured position on this area, how do we intend to capitalize on the next move? Are there chances that buyers can come into this market? Well, it's very, very possible. But to guide our trading decisions for today, I've been able to identify a descending trend line after connecting the series of lower highs since last week, Friday. Now, if we do that correctly, you will have something like this to work with for today's trading session. Now, you know how we use our descending trend lines in this community. Whenever we spot them on the chart, we always want to continue to look out for selling opportunities as long as price action remains below that descending trend line. And with the way things are going right now, you will see price still remains below the descending trend line. And in fact, in the last 1, 2, 3, 4, 5, 6, 7, 8 hours, you will see how buyers have been trying to break out of this descending trend line, and every attempt appears to have failed at every point in time further emphasizing the presence of sellers in this particular market. Now, with the situation here, for me to add more sell positions to my existing trade, I would rather want to see price action take out the lowest point for this week, which is the 1.25800 level. So if price can break down the structure, then I will be looking out for more selling opportunities below the structure. Now, for those of us who are already profitable on this asset, we can just place a sell stop order below the 1.258 and see how this is going to play out. However, if you are new with us, then you want to exercise patience and wait for a retest of structure before jumping into that position. Now, that is how we are going to be maintaining a bearish bias here, looking out for selling opportunities only if price action breaks down the 1.25800 level. However, if price decides to do the contrary, as you will see here that in the last 8 hours, buyers have been trying as much as possible to break out of that descending trend line. Now, if it finally becomes successful that the trend line is broken to the upside, then I want to be seeing this as an opportunity to get ready to buy this asset, as the breakdown of this descending trend line will be the first time price would have broken down the structure in the last 3 to 4 days. Now, if this happens, I want to be buying. In fact, I already have a buy stop order above the 1.26180 level, where I will be looking forward to capitalizing on the bullish opportunity. However, if price breaks out of this trend line and retest it, it makes it more comfortable to feel confident in that buy position. Now, if price action continues to climb high, the breakout of the 1.264 will welcome more buying opportunity, and a further breakout of the 1.266800 level will welcome 1.26680, right? will welcome more buying opportunities in this market. So we look out for buying opportunities only if the descending trend line is broken. So we can even join early enough. If possible, we have a breakout retest around this area, we could join early enough to capitalize on that uptrend move. So we are at a very crucial juncture in this market, as the nature of the attempt by buyers to break out of the structure may be as a result of the anticipation of the ADP employment chain data. Maybe there are some information trickling into the market behind the scenes, and major key players are trying to build a position based on that information. So let's see how that area around the 1.26050 level will play out ahead of the ADP employment chain. Whatever happens here is going to decide where price is likely going for today. So mark out those levels. I'm only selling if price breaks down the 1.258 and looking out for buying opportunities only above the descending trend line. So these are my views on the GBPUSD for today's trading session. If you have any questions, feel free to drop them in the comment section, and you can also use the time I will be using for a break to mark out these levels on your chart. I see your comments here. Aguyi, how are you doing this morning? Good morning to you, and I do hope I pronounce your name correctly. You're asking here, you asked a couple of questions. How do I buy? How do I monitor when it rises? Well, I hope that this question was dropped at the point you entered this platform, and probably you must have seen or listened to what I said in the last 10 minutes so far. And what we have been saying here is how to actually do what you are asking. How do you buy and how do you sell? We've already explained that, and we've already identified levels, structures that we are going to be using to guide our decision. So all we just want to do is to exercise patience and wait for the structures to mature. Now, for instance, in this case scenario on the GBPUSD, we have multiple levels here. We have the descending trend line, which we said this trend line needs to be broken to the upside for us to start considering buying. And at this point, price action still remains below that descending trend line. So we are not going to be buying at this point in time. We only need the breakout to happen before we can start considering buying. And in fact, we have multiple levels like the 1.26180 area. If it gets broken to the upside, we will be adding more positions to our existing trade. We also have the 1.26400 level. If it gets broken again, we had more positions, and we have the 1.266800 level as well. However, if price does not break out of the descending trend line, we have stated here that we will be selling or adding more sell position. That is, if you already have a sell position running, only if price will break down the 1.25800 level. So that's the only condition for us to add more sell positions to our existing trade. So we've already talked about this Haguyi. I hope it is quite clear right now. If you have any other questions, feel free to let me know in the comment section. SN Zokang, good morning to you. Glad to have you around with us. So with that being said, and in the absence of no further questions, let me dive right into the last asset on our watch list for today, as we are running out of time already. So the last asset on our watch list for today is my favorite, and that is the XAUUSD. And in fact, we've done very, very well since the beginning of the week, scooping in over 600 pips on multiple sell positions after capitalizing on the breakdown of that $2,072 level at the beginning of this week. Now, for those of us who capitalize on this one, well done, and kudos to you for being on standby to capitalize on this move. Now, at this juncture, all sell positions have been closed due to the increased buy pressure that started during the later part of the New York session yesterday. Now, gold appears to find some support near the $2,020 level, as you will see, since price action climbed above this level during the Asian session. We have noticed consistent buy pressure around that area. Now, the question going into today's trading session is, will that level become a platform that will incite new buying opportunities, or it will get broken to the downside to incite further decline to the downside? Now, the continued buy pressure on the $2,020 area could be as a result of the anticipating economic release for today, and with sellers pausing after this week's upward movement. Now, all attention now shifts to the US ADP employment change data, providing insight into the labor market ahead of Friday's crucial non-farm payrolls report. Now, our guide for the trading activities for today has been identified on this chart, and in fact I will be showing you in a moment. Now, for the sake of those who missed out on our earlier sessions, let's run through how the week started for us all and what led to the decisions we made so far. Now, at the beginning of the week, we saw this massive impulsive move as we saw price action hit a record high at the $2,143 level, and this spike here can be attributed to multiple factors from both the geopolitical tensions and economic situations in the United States. At the beginning of the week, we had the information of an attack on the U.S. vessels on the Red Sea. We also had heightened tensions in the Middle East as well, and then a couple of mixed data from the U.S. economic docket too, which led into this impulsive move we witnessed at the beginning of the week. So we had a very wide range at the beginning of the week, where price was confined within the 2,143 and our key level area, which was situated at the $2,078 area. Now, we saw how price dropped below our key level. You know how we use our key levels in this community. When price remains below the key level, we want to be looking out for patterns and structures that supports the idea of selling. Now, prior to our live session on Monday, we already had the breakdown of the key level, and price was actually trading below the support line of that range we identified at the $2,072 area. Now, what I told us on Monday is that if price can come back into the 2072, we will be joining a bearish momentum to the downside, and this was exactly what happened, triggering our first sell position for the week. And in fact, we added more positions. Remember, we also identified this level, had a 2050. We also marked out this level at a $2,030 area to maximize the potential of that bearish move. Now, congratulations to everyone who capitalized on this move. And if you had moved your stop losses accordingly, you must have been taken out from these sell positions at this point in time, as we saw buy pressure resume as soon as price tested the $2,010 level during the New York session yesterday, stroke the Asian session, as you will see here. Now, as we go into today's trading session, will this buy pressure hold? How are we going to see this buy pressure continue to the upside, or are there chances that sellers are still strong enough to push price to the downside as we look forward to the US ADP employment change? Now, to further understand this structure, I want us to quickly have a look at what is going on the higher time frame. Now, at the beginning of the week, if you remember vividly, we had this ascending channel identified, which buttresses the strength of the buyers in this market since the beginning of the month of November. Now, remember, we connected a series of higher lows to give us this ascending trend line, the support line of the ascending channel. Then we also had the series of higher highs connected to give us the resistance of the ascending channel. Now, look at what is happening right now. Price is now back into the support line of the ascending channel. Now, every time price comes into the support line, it is expected that buying opportunity will come in. Look at what has been going on in the past. You see buy pressure, buy pressure. Now price is back into the structure, and in fact, in the last 1, 2, 3, 4, 5, 6, in the last 24 hours, we have been noticing buy pressure around this area. So we are at a very crucial juncture in this market. We are depending on how market participant reacts to this trend line would determine if we are going bullish or bearish. Now, if the buy pressure here persists, we shall be looking out for buying opportunities at the breakout of this descending trend line. I will be showing you some structures on the lower time frame that we will be using to guide our decision. So what I just want to say here is that if buy pressure persists above this ascending trend line, we should know that we are within the buyer's territory and feel comfortable looking out for patterns and structures that supports the idea of buying this asset. However, if it so happens that price action breaks down this trend line, then this will be the first time price will be breaking down this trend line in the last 1 month, and this could be a good signal that we will be going bearish in the nearest future to incite that sell-off in this market. Now we are going to be scaling back down into the lower time frame to have a critical look at what is going on here, as we will be using the $2,020 level as a yardstick to guide our trading decisions for today. Now, scaling back down into the 1 hour time frame, we now begin to see how important this juncture is to decide what our next line of action will be. Now, like I said, we are going to be using the $2,020 area to guide our decision. So our center of focus for today's trading session is around the 2020. We are depending on how market participant reacts to the structure will determine what our next line of action will be. Now, in addition to the 2020 is this temporary ascending trend line I was able to spot here after connecting the series of higher lows since yesterday's New York session. As you will see, let me highlight it for you to see. So you can see buy pressure, buy pressure. Sellers have been finding it difficult to break through. Now price is back into that structure and is currently sitting above the $2,020 area. And in addition to this structure is this descending trend line I spotted this morning. If you look at the nature of price action since last week Wednesday, we have some series of lower highs before price action broke out of that structure on Friday, I think. Okay, when was that? Let's see. Let's look at this together. Hold on a second. Let me re-highlight this. And so this is the descending trend line I spotted this morning. Then we saw a breakout of this trend line here on Friday, and during the course of this week, price is back below the trend line, and in fact we've seen some selling pressure around that trend line, though we had a little breakout this morning, but price just dropped back below the trend line. Now price is back below the trend line, which affirms that we are still within the seller's territory at this point in time. So if we are going to be selling today, we can risk some sell positions at the breakdown of the 2020, as a breakdown retest of the 2020 could welcome sell positions. And if price action goes on to break down the 2010, then we look out for more selling opportunities to join the decline to the downside, as price is still below that descending trend line, and of course would have also broken out of this temporary ascending trend line we identified earlier. So below the $2,020 area is an area we shall be looking out for selling opportunities. However, if price breaks out of this descending trend line, then we will be gearing up for buying opportunities in this market. And to guide my decisions for today, I already have a level at the 2030 which I will be using to capitalize on an uptrend move. So you can see how our center of focus is basically going to be between the 2030 and the $2,020 area, where depending on the direction of the breakout will incite the direction we will be placing our bet on. Now, if price continues to climb up and takes out the $2,037.50 level, then we had more buy position. And if price continues to climb high, the breakout of the 2050 will be welcoming more buy positions to our existing trade. So I encourage us all to mark out these levels on our charts, as we will be needing them as a reference point to guide our independent trading decisions for today. So let's allow this to be marked out on our chart, and let's wait for the structures to mature before we jump into any positions here. So these are my simple views on the XAUUSD today. I do hope I made myself very clear, and in fact, if you have any questions whatsoever and probably need some clarifications, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off, see if there are any questions, and then round off for today's trading session. All right, you're welcome, Steamroller. As always, you're very, very much welcome, and it's a pleasure having you around with us this morning, and I wish you best of luck today as well. All right, so in the absence of no questions, I want to assume that we are all on the same page, and it has been a wonderful moment with you guys this morning. I can see Opebalo. Is that a question? It says here that if interest rate is kept unchanged after a news release, what is the possible trader sentiments in that regard? Okay, if interest rate is kept unchanged after the news release. Uh, Remember, there are no interest rate decisions coming up today. That is first of all. You should be clear about that. We are not expecting any interest rate decisions today. And to answer your questions, if interest rate remains unchanged, well, you see, the higher the interest rate, the higher the return on yield, the return on investment. So if we have an interest rate of 10%, so that simply means that if you are investing $100 on your on the US dollar for a year, you have $10 in return. That's 10% on $100. Now, if you have 5%, that is $50 for a year on your investment on $100 on the US dollar. Now, if the interest rate is left unchanged, that means that the rates at which investors are yielding, getting return, will not be changed. So now it now depends on the assets against the US dollar. Now let's take for instance the GBPUSD for instance. Now if the interest rate for the US dollar is 5.5 and the interest rate on the GBP on the pound sterling is 6, that difference itself makes the pound sterling more attractive to invest in, because if you invest in the pound sterling, you have that variance of 0.5 to make on that. So people want to invest more in the US dollar, okay, in the pound sterling. So that is how it works. That is how it really works. So let's ensure. So that's basically how it works. So the higher the interest rate, the better the return for investors. And if there is a better yield in return, if the interest rate is higher, majority will want to start investing in the particular asset that has a higher interest rate. And the interest rate is lower, majority want to be pulling their funds out of that asset that has a lower interest rate. Now, your question says that if interest rate is kept unchanged after news, now it now depends. You see, it depends on what majority in the market now thinks. If the market participant thinks that the long-term view on that asset is not worthy, then they start pulling their funds out. Now, what we do as technical traders here is to ensure that we identify patterns that will give us an inclination into how the market participant will be reacting to that event. So in preparation for that event, what we look out for is patterns and structures that we want to be using to guide our interest rate, to guide our positions. So that's what we are simply doing in this community. So we are looking out for patterns, we are looking out for structures that will give us an insight into where price is likely going to go when the event finally happens. So that is how we do it here. I hope I answered your question, Opebalo. If you think I do not, let me know so that I can clarify on it. Okay, that is that. Wealth again. All right. In the absence of no other questions, I saw your comment, Generous Bull. Everyone is we are a family here, and there is no cause to incite aggressive statements in the comment section. All we are just saying that it is not welcomed for anyone to. It's not welcome for anyone to refer anyone outside the Extra and Split platform. Okay, so you are not expected to refer anyone outside this platform. So thank you very much as you do so. So it's not a problem at all. So in the absence of no further questions, I want to wish us all the best of luck today. It has been a wonderful moment with you guys, and I encourage us all to. I hope we've all marked out our key levels and structures on the chart, as we will be needing them to guide our trading decisions for today's trading session. And always remember that you want to have a well-defined risk management strategy that you need to protect your positions against any sudden pullback that may happen in the market. Every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So in this regard, ensure you have your stop losses in place, well-defined risk management strategy, and you would live to trade another day. For those who joined us for the first time today, I hope you had a wonderful time with us, and I hope you learned a lot in this session. And if you did, I look forward to seeing more of you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these assets have been doing, and at the same time get prepared for tomorrow's trading session. So on this note, I wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening. Bye bye.